National carrier Kenya Airways has been in the red in recent years, having posted a full-year loss of 26.2 billion shillings for the year ending March 2016. Over the last 1 year, the airline has been implementing a turnaround strategy dubbed Operation Pride, which is expected to help the airline stay footed on the recovery path.
Is making the steps in the right direction. Those steps might seem slow. They are arduous. We're in a marathon. It takes time, but there's a demonstration clearly that the operating results are improving and the bottom line is improving.
To this end, Kenya Airways made a net loss of 4.8 billion shillings over the last 6 months, a 60% reduction from the 12 billion shillings loss the airline posted in the same period last year. This was fueled by increased passenger numbers and lower operating cost.
Operating profit at 900 million is up 143 percentage points compared to last year, same time, when we made a loss, operating loss of 2.2 billion. And the loss after tax has reduced 60% from 12 billion last year, same time, to 4.8 billion Kenya shillings.
Kenya Airways remained in the red despite selling key assets such as aircrafts, a prime piece of land in Nairobi, and a landing spot in London. This is something pilots have been vocal about, calling for an overhaul of the management team, who they accused of mismanaging the airline.
Please, let's not be hoodwinked when the results are released and we're told KQ is doing very well, yet we have sold vital assets and we have also sold them at a throwaway price. We need to be aware that just having some money in the bank doesn't say that we're actually really recovering.
Gunza says the airline's main focus is restructuring its balance sheet and creating liquidity to place it on a stronger long-term financial and operational footing.
Part of our capital optimization process, the first phase we talked about was how do we improve liquidity and how do we reduce the overall debt. Of course, it's important that we also start thinking about the second phase, which is about how do we raise new money into the company. And that means that we have to start talking to potential interested parties and share with them what we are doing and tease the market for who has interest.
The 4.8 billion shillings half-year loss means shareholders registered a loss per share of 3 shillings and 20 cents, down from a loss of 7 shillings and 99 cents per share during a similar period last year. The appointment of former Safaricom CEO Michael Joseph to the chair, the airline's board has injected hope among stakeholders who expect improved performance going forward and a quick flight back to profit-making. KQ plans to introduce 30 new frequencies on unspecified routes across its network this year. Caroline Jenga for Business Insight.